Welcome back to the 2024 Budget Day, brought to you by Arise TV and KPMG. We are still live at the Insight Center here in Lagos, Nigeria, and we are about to have a macroeconomic analysis of the budget. And we've got two guests who, frankly, I don't even think I need notes for this segment, because we talked to these two individuals several times on the Arise News channel across several segments. I'm very happy to introduce Mr. Tilewa Adebajo, who is the CEO of the CFG Advisory, and also Chinwe Egwim, who is the Chief Economist at Coronation Merchant Bank. Gentlemen, thank you so much for joining us. Happy for you guys to be here. Chinwe, let me start with you. We've talked about the we've talked about the vision and then the reality of this budget. In your view, looking at the budget, looking at the numbers, what would you say the top 3 priorities for government should be? What do you think they should be, Chinwe?
Well, let me start by saying that when you look at the budget, the benchmark assumptions, they are attainable, but a whole lot of work needs to be done. And so when you look at indicators like oil production, when we consider some of our in-house projections, some of those projections are slightly lower. But let me answer your question to be succinct. Top 3 priorities from my vantage point would be 1, economic diversification. I know that that's an anthem right now. We've been saying it for years. But the government really needs to look into economic diversification. There are sectors like agriculture, and I'm speaking from the perspective of the national accounts, which, by the way, I believe should be rebased and refreshed. But agriculture, and not just farming, smallholder farming, but looking through that value chain, there's so much potential that's still untapped in that sector. There's mining, there's specific segments within manufacturing as well. And of course, my favorite, which is the orange economy, that's the creative industries. I think the government needs to really look into that when it comes to diversification. There's so much talk around boosting non-oil revenue as well as non-oil exports, and this is the way to go with regards to that. The next one would really be infrastructure development. Energy is important. It's a lubricant. It's something that's going to fuel other sectors. When you look at the national accounts, non-oil economy accounts for about 90%, right? Just from a statistical perspective, and the oil sector accounts for about 10%. But the oil sector indirectly accounts for 40% or lubricates at least 40% of other sectors. So it'll be good to see the energy, the power sector, improve, because if we really want that industrial takeoff that we keep talking about, we can't do it without power. Infrastructure, roads, logistics is important. Ports. We need to also look into ports management, improving what's going on there, because if we're talking about improving exports and trade, we would not be doing ourselves justice if we're still having issues with that area. I think the last one I would mention would be human capital development. We haven't really received new figures with regards to unemployment rates. What we have in the public domain is still 33%, which a handful of people believe that is significantly higher than that. And it's just interesting because there's so many job vacancies, right, that people can't fill because they don't have the skill set. So human capital development is important. Drilling it down, I would also say that there should be some kind of focus on the blue-collar economy. I think that segment has been ignored for too long. That's where you have your plumbers, your welders, your carpenters. I think that we should be looking into how to improve output from that segment. Revising the curricula of schools is very important. Most of them are outdated and do not reflect economic realities. So I think these are areas that they should look into to help with driving the objective of this renewed hope budget.
Thank you so much, Chinwe. Tilewa Adebajo, let me bring you in here. So that's priorities. What about opportunities? Do you see any opportunities in this budget as far as what industries can expect from the government? What do you see?
Well, let us take a look at it from a global perspective of the budget. The budget is just about 9% of our GDP. So a budget of under about $30 billion. GDP is about $390 to $400 billion. So the opportunity more is in the policy side of things. What sort of policies will the government implement that will open up the economy. I think, as Tola mentioned in his opening statement, there's issues of debt sustainability that we need to address urgently. So it's more about productivity within the economy and trying to achieve growth. And I think it's quite more the policies that will provide the opportunities. The Honorable Minister mentioned MOFI and the proposed Ministry of Petroleum Incorporated also. The opportunity lies within those two agencies, within the privatization. I think government needs to kickstart their privatization process. They need to also simplify the concessioning process, because we have the ICRC, we have the BPE, and between the ICRC, BPE, the Ministry of Finance Incorporated, and the Ministry of Petroleum Incorporated, if government can get these agencies doing what they're supposed to do, then I think we'll see some value added, because it's quite clear from the debt profile, as you've seen, by next year, the debt service at 11 trillion will exceed both capital and recurrent expenditure. So government really does not have much more to spend. It will have to depend, as the minister has acknowledged, on the private sector to drive the economy. So you need to privatize, you need to concession, and you need to let government, and there's Infracrop, which is another company. So government needs to get these agencies working at optimal levels to be able to get private capital into government. Productivity is an issue. Foreign direct investment is at an all-time low, less than $200 million. And we need to understand the two big projects coming through. LNG Train 7 is $6-7 billion. And they've made an announcement they're not going into LNG Train 8. And LNG's Train 1 to 6 is suffering from supply of gas. So productivity issues. Dangote has finished his $18 billion refinery. According to information reaching us, he's already financed that with his balance sheet, and he has less than $3 billion in debt on that. So what is the Dangote Group doing to be able to bring on another $10 billion investment? BUA, we know, is going into another refinery project and has made some investment commitments. We're hearing something about the Chinese company going into steel. So what is important is that the Minister of Industry, Trade and Investments needs to come back to be able to show us, and government needs to be able to put in the right policies that will not only attract foreign direct investments, but more importantly, local direct investment.
Yes, indeed, very interesting discussion there. I'm going to come to you now, Chinwe Egwe. Mr. Adebajo has been talking about the debt profile, and we know one of the main points of the budget over the years has been the fiscal deficit. Nigeria is having to borrow to finance that deficit. What can the government really do in 2024 to show its commitment to really managing the fiscal deficit, given the challenges we faced over the years with tax revenues?
Yeah, well, thank you for that. And it was really interesting listening to the Honorable Minister's segment, because he did throw some lights with regards to that. Fiscal discipline is important. That's number one for me. I would say also that the target, the revenue target, it is ambitious. And we are all excited to see this, but like that implementation willpower, we hope that it is there. So boosting non-oil revenue is another, aspect, because most of these ratios, the debt service ratio, that for debt to GDP and all of that, some of them are affected by the revenue figures, right? And so boosting non-oil revenue is key. I would also say that allocating funds that they have borrowed to projects that actually show significant returns is also important. So yeah, I think those would be the top three things I would say with regards to managing that fiscal landscape, because really the revenue segment or the revenue components is important for this year's budget.
Yeah, you talk about the quality of spending, the allocation of funds, but you also talk about boosting non-oil revenue. Just very quickly on the boosting non-oil revenue, one or two key things that you think absolutely must happen there.
Well, you mentioned tax already, so I would say not really concentrating on an increase, but more expanding that tax net. I think a lot of work needs to be done there. And also just trying to formalize the informal. The informal sector is huge, and so deliberate efforts towards formalizing the informal would also help with generating additional extra revenue that the government requires.
Yeah, indeed. So, Mr. Adebajo, you know, just on this debt issue, we've talked about over the years the quality of government borrowing. We've also talked about which institutions are really long-term sustainable partners insofar as Nigeria's debt requirements or borrowing requirements are. What do you think that strategy should look like? Multilateral lenders, bilateral lenders? What should the strategy for Nigeria's debt management look like?
Well, at the moment, Nigeria's debt profile is about $130 billion. If you add the deficit that is coming up from this year's budget, we're looking at an additional $10 billion. Then you add the additional $1 trillion the National Assembly put onto this budget, which also has to be financed. So the actual deficit financing is now 10 trillion naira. So by the end of this year, we'll have a debt profile of close to $140 billion. Now, clearly, this debt is becoming unsustainable because you get to a stage where you've maxed out your credit cards. And I think that's the situation with Nigeria right now. So what we need to focus on this year is the fact that the key risk to us is our 30 trillion ways and means financing. 30 trillion naira of ways and means financing, 7 million was added between May and December. 7 trillion was, which has come out. 23.7 trillion of that has been securitized, and you know, in the name of central bank, because 70 trillion cannot enter into our capital markets. We don't have the capacity. So what I think is important, first of all, is we need to have resolution to the ways and means, because right now securitization is illegal. So what the president and the National Assembly do not have the powers to securitize ways and means. The powers they have is to post remedial legislation to either amend or repeal the relevant sections within the CBN Act and the Fiscal Responsibility Act to be able to allow how we will resolve the 70 trillion. So we need to resolve that, because you cannot put 70 trillion into the capital markets today. Government cannot borrow that. So once you resolve that issue, then your capacity improves significantly. Then we need to restructure the local domestic debt, and we also have to restructure the international debts. We need to talk to our multilateral creditors, the Eurobond holders, to see how we can do that, to give us some breathing room based upon our cash flows. And I think we've said it clearly that the silver bullet really is that oil is now $70 a barrel. So Nigeria should be at a windfall. At a point in time, we had excess crude account in excess of $18 billion. But, you know, that's not the case today. So we need to go into some debt restructuring, give ourselves some breathing room so that when the revenues begin to improve and come in, then we can have sustainability. So I think that's really what we need to address now to ensure that our debt profile has improved. Yes, the multilateral debts are there, they're long-term, they're there, but how much more can we do? Because we do not want to go into an IMF resolution, and we do not want an imposition by the Paris Club or the London Club. This is something we need to do ourselves based upon our cash flows so that our budget can be implemented, and within the next year, we can resolve our revenue issues, and then we can now put Nigeria on a track of sustainability. Because growing this economy is not very difficult. 2014 and 2016, the Nigerian economy grew in excess of 8%. Why? If you look at the historical data and the relationships between GDP growth, interest rates, and inflation, at that point in time, interest rates were like between 12 and 15%, and inflation was between 10 and 12%. The targeting of inflation that the central bank is doing is very, very important. If within the next 9 months we can get to those sort of revenues, we will be assured 8% economic growth. And that indeed is the silver bullet.
Yeah, indeed. And of course, the government has been targeting a $1 trillion economy. Quite a lot to unpack there, Rotas, from this discussion.
Indeed. I want to get to the central bank. With the mandates of the central bank: price stability, low inflation, the exchange rate management. How do you think we can get there, considering where the numbers are? This whole theme seems to be vision and reality. So, how do you think CBN gets there?
Well, let me piggyback on what Tilewa said around inflation. Inflation for Nigeria is not just demand pull. right? It's a blend of demand pull and cost push inflation. And so having sole dependency on the CBN to pull down the inflation rate is not ideal. There has to be proper collaboration with the fiscal side because of the cost push component of inflation, which in my opinion, if I was to draw a pie chart, the cost push would consume so much more than the demand pull. But that said, we do expect to see consistent monetary policy tightening to combat rising inflation. From my perspective, and at this point, because projections are usually revised, I would say there will be consecutive rate hikes in the first half of 2024 because the mandate is really that price stability. Now, with regards to exchange rates, for me, it's really a liquidity issue, right? Liquidity constraints still persist. And I know there are conversations that are going on to try to boost that liquidity. And once that is sorted, to a good extent, we should see that impact rates. There's still speculative demand that's driving the rates, particularly in the parallel market. Also, I would say that we did see news recently around some clearing of the existing backlog, and based on our calculations, when we do that estimate, it comes to 30% of the number that was disclosed. And so 70% still remains. When you look through the trend, and I'm referring to the NAFEM, the official window, you'd see that CBN did not inject into that window for a few months, since August actually of last year. So I'm not optimistic that we would see injections, at least in the first quarter of this year. So again, what I'm trying to say is that liquidity constraints will persist. Those are two indicators you mentioned for CBN.
Yeah.
What was the third?
Well, actually, we're running out of time, and thank you for the in-depth answer. But Tila, let's round up with you jumping in on exchange, because real quick, Chinwe mentioned the CBN trying to address backlogs. On the front page of today's This Day newspaper, Nigeria's newspaper of record, at the top of the masthead, as Mr. Feni likes to say, the CBN did say that they had paid about 61 million naira to the airlines. The airlines on today's newspaper, the headline today, said that's not enough. 61 million, you're owing $800 million. So that's a drop in the bucket. What is? I have to have you chime in on the exchange rate. What do we do? Do we float it completely or what?
Well, you see, for me, like I said, this is a marathon, not a sprint. So the central bank really needs to move very quickly on two things. They have an inflation targeting program which they need to announce and begin to implement, because the market is waiting. They also have a new foreign exchange management system which can no longer wait. So the central bank really needs to make announcements on these two very critical things, especially foreign exchange market, so that we can begin to see some stability in the market and its operations. Like I said, it's a marathon and it's not a sprint. The confidence I have in the economy is that we have an economic management team that is very sound. The Honorable Minister here is an ex-City banker. The Central Bank Governor is also an ex-City banker. The Coordinating Minister of Economy and Minister of Finance is an ex-Chase Manhattan, now JP Morgan banker. So we have a sound team and the expectations are very high. They understand the situation and they know what's going on. So the key for us is that they need to signal the markets properly to be able to restore confidence, and we need to see sincerity and commitment with the implementation. So we know where we're going, but people are getting impatient. So it's the signaling that is becoming important now.
Yeah, indeed. You say it's a marathon, not a sprint, but we have to sprint away from this discussion to talk about something really key. Thank you so much, Chinwe Eguin, Chief Economist at Coronation Merchant Bank, and Tilewa Adebajo, CEO at CFG Advisory.